There's no other analyst who ranks higher on Wall Street that analyzes Tesla stock than Colin, and his returns are pretty good. Colin shared some of his concerns about Tesla stock, so let's see what he has to say.
Colin, I know you joined us earlier in the month when you downgraded to perform on this name. Your thoughts, given the activity, given the fact that, to Amy's point, you have seen some more headlines that speak more fundamentally to the business in recent days as well. Your thoughts on Tesla at these levels currently?
So there's a couple of really interesting things as we wrap up the year and get into 2023. First, this is going to be a year when the pretenders and the real contenders get washed out in the EV space.
Next year, we will probably start hearing some serious talks about bankruptcies of certain companies, down 83% almost in just 1 year. General Motors also down 42%, Ford 47%, Lucid 82%, ouch, almost 83%. Nikola only down 78%. That doesn't sound right. Here you go. More like how much? 96.5% now. That hurts. And the thing is, unlike for Tesla, their fundamentals for most of them are not looking really very good. Now, some might turn out great investments, but would I be putting my money into them? No. Volkswagen? No. Toyota? No. BYD? Well, Warren Buffett has some money in it. He's been selling, though. Every single month he sells more BYD stock.
And so I think one of the things that we've been excited about with Tesla is just the technology leadership.
Are you saying that Wall Street's #1 analyst for Tesla stock is saying that Tesla is not just a car company, but also possibly a technology company? Who would have seen that coming? That's a rhetorical question.
And so as we look at that and look at, how many folks really are going to buy EVs and what those unit economics look like, we see Tesla in a very strong position, and that has been a consistent view for us.
The more Teslas Tesla makes, the cheaper Tesla can make those Teslas. Therefore, Tesla can either decrease prices, exploding demand, all while retaining juicy margins, or Tesla can keep the prices at the same level if demand is still strong, and this would further increase margins. Here, just look what happened when Tesla cut prices by another $3,750 and also gave a 10,000-mile supercharging credit. Inventory just disappeared immediately. And by the way, the inventory was a lot more than just 1,000 vehicles, because Tesla only shows you one same configuration, even if they have 20 cars in that exact same configuration. So the number was actually much higher. So the inventory dropped actually by a lot more units than what you would think looking at this. Those saying that Tesla is having demand issues are going to be very surprised over the next few years. Temporarily, there will be some bumps. No doubt about that. Long term, demand is going to be strong. That's my deep conviction.
Now, the concern here is that as you have more options on the market and you have some incremental competition for Tesla, and you have Elon out, or in and around Twitter, changing the consumer perception of the brand, that some of those folks decide to make a different choice away from Tesla, despite the product being advantaged versus some of their competitors. And that's the thing that really has been a concern for us. And so as we look at these fourth quarter numbers and kind of the intensity that we always see at the end of the quarter for Tesla, it's going to be very interesting next week when we see those results to see how many cars they produced and how many they actually shipped.
For Tesla stock specifically, I would think it is better if Elon did not tweet politically or get himself involved in very dividing subjects. I mean, even the #1 Wall Street analyst that analyzes Tesla thinks it's not good. So his opinion, I think, certainly has some weight on Tesla stock. So just him alone saying this, even if this was not true, but just him alone saying this is going to make Tesla stock drop, I think, at least just a little bit. However, long term, I am not concerned about this. And here's why. It's not that you can make an argument that these tweets are actually very damaging to Tesla. And even if that is true, I would still not be concerned. Let me explain why. Look at what Elon and how Elon has been tweeting lately. He's still tweeting links, and he lets you know sort of what his position is. It doesn't have this sort of sensational screaming behind it. Of course, Elon is still going to have to say some Elon things, right? But it's no longer like this one is just funny. And just for a moment, I thought that Elon is inviting people to correct his tweet right here. That would have been pretty funny. And Elon, instead of making a very strong statement, right here, he is asking a question. I prefer this gentler approach personally, where Elon still gets out his message, but without all of the anger and all of the divisiveness that it causes in the meantime. Sure, if you are on Elon's side, on whatever stance that he is taking in that moment, then you probably love his rhetoric, but this is a more uniting approach. To me, it is not obvious that Elon needs to show extremely strong stances against something, because Elon has so much influence now anyway, with him owning Twitter, that it's just going to happen anyway. Right here it says, Elon Musk's reputation is in danger. Elon Musk responds to that, the legacy media should worry about its reputation. We have only just begun. So I love this kind of Elon where he just says the results will show who's right. And right here, also look at the language that Elon is using. He's just saying concerning. He's not saying something that would really anger most people. Also, for Elon's dream to come true, for humanity to establish a colony on Mars, Elon needs trillions of dollars. A lot of it, I believe, is going to come from Tesla. So, short term, Elon may not be concerned about Tesla stock too much, unless he is right about to sell it. Long term, I believe Elon is very concerned about Tesla stock price. Why wouldn't he be? He needs trillions of dollars to fund the colony, literally. If he doesn't have the money, then he has to raise the money somehow. But for him, it might be easier just to make the money. If it becomes more clear that Elon is indeed damaging Tesla with his tweets, I think the approach will calm down, just like sort of how he has done just now. And Tesla will be just fine. That is my personal deep conviction. But Elon will push it right to the edge.
And then as we look into the first quarter, we're going to be tracking very closely what happens in China as some of the rules shift in terms of the tax credits and other support that we've seen for the EV space, in the early part of the year, and how the sell-through actually works.
As we've seen the stock sell off, it's raised the question again of whether Tesla should be viewed as a tech stock or as an automaker. How do you see it?
There's, I think, three elements of the business. One, it's a material science company that's really done an enormous amount of innovation. And I think one of the things that got missed in the past week was the run rate on the 4680 production. I think that's a very big deal for this company as they move to a new battery and what it does in terms of range and performance for the vehicles.
This right here is what Colin is talking about. Also, let's not forget gigacastings.
The second piece is the auto company. They're making cars and they're making specifically EVs, and that's the core part of the company. And then the balance of this is really around AI and what they're doing in terms of navigation with self-driving vehicles and all the other applications for AI. And so we really see it as a company that's really built on those three pillars. You could throw in the solar piece of it, but that seems like a sidelight at this point. But I think it's really more of a technology conglomerate that's solving some very, very important problems and very difficult problems, and has a corporate culture around innovation and meeting the challenge. And so we see them as more of a technology conglomerate, as I said here, but really the cash flow is really being driven by the vehicles, and so it's hard to separate out that cash generation from the auto market at this point.
Elon Musk himself said more than a month ago, then he was speaking to Ron Barron, that there are two reasons to invest in Tesla stock. Number one is full self-driving, and number two is if you believe in the humanoid robot that Tesla will build. After that conference, Tesla stock has now dropped so low that I believe you can make a strong case that it's not just about full self-driving anymore. It's also about the EV business. The EV business alone, I believe, is going to get Tesla back up eventually to its previous highs. But full self-driving is the main reason why I am extremely bullish long-term on Tesla stock. I mean, look, the car is driving by itself. No takeovers. This is, I think, more than a 10-minute drive, maybe 15, 20 minutes or so. If you see this happening already, and there's no other vehicle that can do this with just vision only, show me another company that can do this right now, and then I will not be as bullish on Tesla stock. But no one else is even attempting a vision approach. LiDAR is so different. The vision approach is what's going to get Tesla to be able to launch full self-driving basically immediately to the whole world once it is solved and done.
Yeah, Colin, you referred to what goes on at the end of the quarter as the intensity around quarter end. So essentially trying to make presumably their volumes, and there's reports of these incentives to actually try to buy a vehicle by the end of the quarter. Does that place the 2023 consensus of close to 2 million vehicles sold at risk, the fact that it seems as if they're having to stretch, or do you think that that's a pretty comfortable number?
You know, it's a number that I think is fair at this point. You know, I think we need to see what the real rules are around the U.S. tax credits. You know, some of the sell-through in Europe is electricity prices are a bit higher than they have historically relative to diesel, for sure, as well as the implementation of some of the rules around zero emissions vehicles in certain EU cities. And I think this 2023, thematic is going to be around testing the market for EVs. You know, you've heard a bunch of stories around folks that couldn't drive their cars because of the cold around Christmas. That's pretty disappointing for a lot of vehicle owners, and it's going to be a warning for folks to buy new ones. But I think this is a real test year that we're coming into, and so I think that the 1.92 million vehicles is a fair number for Tesla. But the question is around what's the cash flow to actually push those vehicles into the market. And the question for us is really around incentives for marketing and these discounts that we're hearing about. That gives us a little bit of pause around what the cash generation might ultimately be. We still think they generate an awful lot of cash, but it's just not going to be the upside numbers that I think some folks had hoped for.
If we have a recession, Elon said that Tesla will sell cars at a lower price, even if that means profits are basically going to be wiped out. So if we do have a very bad recession, I do expect much lower profits temporarily. And then once that recession is over, I expect the profits to rocket right back up. And these are 48 reasons why I only own Tesla stock in my stock portfolio. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.